Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be seeing the market performance this week. So from 29th July to 2nd August 2019, how the market has performed overall. Indian markets witnessed the second worst week of 2019 as the benchmark indices fell by about 2% for the week ended August 2nd. The Nifty 50 fell by 2.54%, its worst weekly performance since May 10th when the index was down by about 3.7%. There has been persistent selling by foreign investors that has pulled out more than 6,000 crore rupees from the cash segment of Indian equity markets. Also, there are muted corporate results, signs of weakness in the economic growth as reflected by the core data, and on the global front, the commentary from the US Federal and fresh concerns from trade war between the US and China. So here are the chart for the Nifty's weekly performance. This is a 30-minute candlestick chart for the Nifty 50 index. And as we can see, on 29 July around 9:15, the market opened at 11,250 levels and it has dropped throughout the week with a slight upward movement a little bit, but overall it has gone down and Nifty closed close to the 11,000 mark level. So next, we'll look at the 30-minute candlestick chart of the BSE Sensex index. And again, here also we can see that the Sensex has fallen from the 37,848, the opening levels on 29 July, and dropped to the levels of 37,137 at the end of 2nd August. So the S&P BSE Sensex managed to reclaim its crucial level of 37,000. However, for the week, the index fell by about 2%, as we have already seen in the charts. The broader markets, especially the small caps, witnessed fierce selling pressure. The S&P BSE Small Cap Index plunged by 4.3% for the week ended August 2nd. The S&P BSE Mid Cap Index was down 2.2% to 13,546, a level which was last seen on February 2017. More than 400 stocks in the top 500 companies of India Incorporated recorded negative returns for the week ended August 2nd. Out of 419 stocks, 59 stocks in the S&P BSE 500 index fell in double digits. So here are some of the stocks that gave a double-digit negative return this week, starting with Coffee Day Enterprises, which was down by 48.64%. Bliss GVS Pharmaceuticals was down by 39.55%. Care Ratings was down by 34.21%. Vodafone India by 31.78%. Lakshmi Vilas Bank was down by 28.57%. India Bulls Ventures was down by 24.16%. SREI Infrastructure Finance was down by 22.93%. India Bulls Real Estate was down by 22.72%. Bombay Dyeing and Manufacturing Company was down by 22.4%. India Bulls Integrated Services was down by 21.86%. Dish TV India was down by 21.78%. India Bulls Housing by 21.41%. GE T&D India was down by 20.97%. Lastly, by Sadbhav Engineering, which was down by 20.36%. These are the top 15 companies who had the most losses this week. In the coming week, apart from corporate earnings, investors would watch out for the outcome of the Monetary Policy Committee. Most experts see a 25% base points rate cut from the Reserve Bank of India to lift growth in the Asia's third largest economy. According to Ajit Mishra, the Vice President of Research from Religare Broking, who said that considering the current economic slowdown, muted earnings, and stretched valuation, we would continue to remain cautious until there are meaningful signs of revival in the corporate earnings. However, the upcoming key events would have a bearing on the Indian markets and would dictate the trend. So let's look at the technical outlook of this week. The Nifty 50 failed to close above the 11,000 levels for the week ended August 2nd. It is still trading below its crucial 200-day moving average, placed at 11,154. The weekly price action formed a sizable bear candle carrying a lower high low, indicating prolonged correction on the breach of the 200-day exponential moving average. The index formed a bearish candle on the weekly charts. It looks like Nifty has formed strong support near the 10,848 zone and resistance is coming near the 11,150 to 11,300 zone. So let's look at the Nifty 50 chart. So this is the 15 minutes Nifty candlestick chart, and as they have already mentioned the technical outlook, so here we have the moving average, 200-day moving average line closing above near the 11,154 levels here. However, the current Nifty candlestick chart is going way below the 200 levels, so it's showing a nice bearish trend here. So here is the daily chart. The Nifty candlesticks is a 1-day candlestick chart. Again, here we can see it is the market is showing that it is still below the 200-day moving average levels, showing how bearish the uh, Nifty is at the moment. According to Dharmesh Shah, the head of technical from the ICICI Direct, he said that going ahead formation of higher high-low supported by a decisive close above the previous session high would be the first sign of a pause in the ongoing downward momentum. He also added that we expect the index to hold the current week low of 10,848 and witnessed a meaningful pullback towards the 11,300 levels in the coming weeks. So we advise the traders to refrain from creating aggressive shorts at the current levels. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. For this specific news item, we'll be adding the source in the description below if you'd like to explore more. If you'd like to start trading in the stock market, you can create your Demat account with Alice Blue. Just click the link in the description and fill out your details, and you can create your Demat account soon to start trading.